Hey everyone, welcome to This Explainer. Today, we're going to completely demystify some of the most common financial acronyms out there and make them literally incredibly simple to understand. So, if you've ever felt, a little lost when the financial news comes on, you are absolutely in the right place. You've probably heard people talk about NSE, BSE, NYSE, and NASDAQ all the time, right? But what are they actually? I mean, are they massive multinational companies? Are they trading apps you just download on your phone? Are they stock markets or something else entirely? Well, let's make it crystal clear right now. So the absolute easiest way to wrap your head around NSE, BSE, NYSE, and NASDAQ is to just know that they are all major stock exchanges. Now, you might be wondering, what exactly is a stock exchange? Well, think of a massive, bustling physical marketplace where buyers and sellers come together. It's like a giant farmer's market. But instead of buying everyday items like, vegetables or clothes, people at a stock exchange are buying and selling ownership in companies. Basically, when a company wants to raise money to grow, they can offer pieces of their business to the public. These are called shares or stocks. A stock exchange is simply the highly organized, secure, and regulated marketplace where all those shares are traded. And here's how the whole shebang seamlessly connects. It's like a continuous loop linking you, the investor, directly to the company you want to invest in. Now, as an everyday investor, you don't just walk right up to a stock exchange and knock on the door. You actually access the stock market through a broker or a brokerage platform. You just place your order on their app or website, and then your broker goes to the stock exchange to execute that trade, matching you up with a seller. The exchange sits right there in the middle, ensuring the whole process is safe, fast, and completely transparent. Section 1. India's Markets, introducing the NSE and BSE. Let's kick off our geographical tour with the two primary pillars of the Indian stock market. If you're investing in companies based in India, these are the two names you absolutely need to know. First up, we have the BSE, or the Bombay Stock Exchange. Established way back in 1875, it holds the incredible historical legacy of being Asia's oldest stock exchange. It's known for having a massive variety of listed companies, which makes it a real favorite for long-term investors who are looking at small and mid-cap stocks. On the flip side, we have the NSE, the National Stock Exchange of India. Now, this one was founded much later in 1992, but it completely revolutionized the game. The NSE was the pioneer that brought electronic trading to India. Today, it's actually the largest exchange in India by trading volume, offering incredibly fast and highly liquid trading. That makes it super popular with active traders. And crucially, both of these massive marketplaces are tightly regulated by SEBI, so you can be sure your investments are safe and the rules are fair. Section 2. The U.S. Markets. Introducing the NYSE and NASDAQ. Now let's fly over to the United States to look at two absolute titans of the global financial world. Just like India has two major exchanges, the US is dominated by these two heavyweight marketplaces. First up is the NYSE, or the New York Stock Exchange. Founded in 1792, yeah, it's that old. It's the world's oldest and largest traditional exchange. When you picture a chaotic trading floor on Wall Street with people yelling and waving papers, you're picturing the NYSE. It operates as an auction market and is famous for listing massive, established blue-chip companies. Think of legacy brands that have literally been around for generations. Then we have NASDAQ. What's really interesting here is the stark contrast and how they started. Founded in 1971, NASDAQ was built entirely differently from day one. It is a massive, fully electronic dealer market. No chaotic trading floor here. It's famously become the go-to home for major technology and innovation companies. But quick caveat. While it's heavily associated with tech giants, it's not exclusively a technology exchange. You'll find plenty of other growth-oriented businesses listed there too. All right, let's anchor all of this geographically so we don't get mixed up. If you're looking to buy shares in Indian companies, you're looking at the NSE and the BSE, which are both based in India. But if you want to buy shares in American companies, you'll be dealing with the NYSE and NASDAQ based in the United States. So that's 4 acronyms, 4 massive marketplaces split across 2 major global economies. Section 3. The crucial distinction. Exchange versus index. Okay, you've got the exchanges down perfectly. But if you ever watch the financial news, you're absolutely going to hear 2 other terms thrown around alongside these acronyms, and it almost always trips up beginners. Let's fix that right now. The crucial point here is understanding the difference between a stock exchange and a market index. As we just learned, an exchange is the actual physical or electronic marketplace. It's where the buying and selling of stocks actually happens. An index, on the other hand, is kind of like a thermometer for the market. It's simply a selected group of stocks used to measure the market's overall performance. Think about it. You can't realistically look at the daily price of all 5,000 companies listed on an exchange just to see if the economy is having a good day, right? So, financial experts take a sample of the top companies. By tracking just that smaller group, we get an instant temperature check on how the broader market is feeling. Let's look at how this applies to the Indian market specifically. So, the NSE is the marketplace. Its main thermometer, or index, is called the Nifty 50. The Nifty 50 simply tracks the performance of the top 50 companies listed on the NSE. Makes sense, right? Similarly, the BSE is the marketplace, and its main thermometer is called the Sensex. The Sensex tracks the performance of the top 30 companies listed on the Bombay Stock Exchange. So when the news anchor says the Sensex is up today, they just mean the collective value of those 30 top companies on the BSE has increased. All right, let's put this new knowledge to the test. Quick quiz for everyone watching. Is the Nifty 50 a stock exchange or an index? And what about the NSE? Is that a stock exchange or an index? Don't overthink it. Jump down into the comments right now and drop both of your answers. I really want to see who was paying close attention. Okay, let's do a rapid-fire recap to make sure this is locked in your memory forever. Number 1, NSE and BSE are the major stock exchanges, the literal marketplaces located in India. Number 2, NYSE and NASDAQ are the major stock exchanges located in the United States. And finally, number 3, Nifty 50 and Sensex are indexes. They are the thermometers used to measure market performance, not the marketplaces themselves. If this explainer finally made NSE, BSE, NYSE, and NASDAQ easy for you to understand, please hit that like button and subscribe for more simple visual stock market lessons. And hey, don't forget to answer today's quiz down in the comments section. While you're there, let me know, what complex financial topic should we explain next? Thanks so much for watching, and keep on learning.